ProPublica series, The Secret IRS Files, has a new entry this morning. It is called The Biotech Edge, how executives and well-connected investors make exquisitely timed trades in healthcare stocks. And for more on the story, we're joined by one of the authors, ProPublica reporter Robert Federacci. Good morning. It's nice to see you again.
Good morning. Thanks for having me.
It's another fascinating piece in this series, this time in the biotech world. Explain to the audience what you found and what you're seeing. And the real question is whether you think it's illegal.
Yeah, so for the first time ever, we've been able to review personal stock trading data for thousands of the wealthiest people in the country. As you said, we've previously revealed that executives across sectors are trading in their competitors and their partners with remarkable timing. Today's story focuses on biotech and other relatively small healthcare firms. We found dozens of incredibly well-timed trades, including by individuals who are competing against those companies, partnering with those companies, or have other personal ties.
In some cases, you have them making investments in companies that they know they're about to do a deal with.
Yeah, so if you remember a couple years ago, the SEC made headlines, sort of their first shadow insider trading case. An employee at the company Medivation learned that his employer was about to be acquired, and he didn't buy options in his own company. He bought options in a competitor that also rose on the news. And what our data shows is it wasn't just this mid-level guy who was trading in competitors. The CEO of the company was trading millions in such firms. And, one example, on the very same day that CEO finalized the acquisition of a niche type of cancer drug called a PARP inhibitor, he bought about $8 million of stock in a second company that also produced a PARP inhibitor. And, experts we talked to said that, the acquisition of one PARP inhibitor will affect the makers of everyone in that small niche. And, the stock did go up.
The question is, you found this, and you found this through IRS tax data. Is this information and data available to the SEC? And to the extent it is, why do you think they have not acted?
So we have, well, first of all, the SEC does not have access to the kind of data we do through this trove of IRS data. They do have, pretty comprehensive data. They could look at these trades. We have gone to them and we have asked about specific cases. They have not commented. More importantly, we've asked them about their enforcement priorities and whether they're interested in focusing on this kind of trading. Executives trading in partners, right. Trading in competitors. They have not commented, so we don't know.
From a policy perspective, though, to the extent we all care about the credibility of the markets, do you think there needs to be a new either different enforcement and policing, different policies so corporate leaders can't be making these types of investments? It appears on the face of it, some of it just is plainly illegal.
Yeah, well, we've talked to former SEC folks, former DOJ folks. They're disturbed by what we're finding. They say that these trades risk running afoul of the law, and they're concerned that if this kind of trading goes unchecked, unscrutinized by the SEC, right. And we've looked at dozens of trades now and have no indication that the SEC has looked at any of them, that public faith in the fairness of the markets is going to be undermined. How
about the fair to say a civil case could be brought by some shareholders, either of private companies or public companies, to say that you've misappropriated profits that ultimately should have either not existed or gone to us?
Look, I mean, that's a question for someone else, but I do think that shareholders in these companies, people on the other sides of these trades, I don't think they'll be thrilled with this news.